Welcome to today's episode of Peak Market Watch. We speak with market leaders in commercial real estate and related services who have a close pulse on the current market environment. My name is Anton Mattli, co-founder and CEO of Peak Financing. I'm honored to welcome Alex Cartwright, founder and managing partner of HotelSHIFT, which specializes in hotel to multifamily conversions. Alex has a PhD in economics from Mason University, and he's also an associate professor at Ferris State University, where he teaches on economics and international business. Welcome, Alex. It's a pleasure to have you with us today.
Thanks, Anton. It's a pleasure to be with you.
So that was just a very brief introduction, but it's always helpful when our listener hear directly your path to where you are today. So maybe you can spend a little bit of time just explaining how you ended up where you are today.
Sure. So I'm maybe not your typical commercial real estate guest in the sense that I'm certainly in the ivory tower of academia, but I love doing things out in the real world. So I loved economics ever since I was in college, understanding how prices get made in markets, understanding the role that government plays in helping or hindering economic growth. And it was because of that I went on to get a PhD in economics. But my dissertation is about the central role of entrepreneurship and economic growth. I've always had a respect for entrepreneurs, and I've always aspired to be one. And so while I love teaching, I started teaching, but I always was interested in doing something more entrepreneurial. I'd started investing in real estate, and at a small scale, just started off doing an owner-occupied duplex, and then got another duplex and another duplex, and eventually graduated into doing some multifamily syndication. And I wanted to keep growing in that world. I find providing clean, affordable housing something that's important and fulfilling. I find it profitable. But at the same time, a couple of years ago, specifically 2021, with interest rates and cap rates going straight down, the risk reward really was not there for me any longer. And I remember thinking to myself that I had no edge in the multifamily space. There was no special off-market deal that I had access to. I didn't have a big company with vertically integrated construction. I did not have access to better financing than my competitors. And I did not have a list of 5,000 accredited investors to pull funds from. And so I thought, why should anyone place capital with me versus a more experienced operator? And I couldn't come up with a compelling reason. And so I knew that I needed to get a niche within multifamily. And I went to a conference a couple of years ago. It was actually the best ever conference out in Denver. And I was speaking with a broker at that conference who encouraged me to come and look at a hotel with him. And I'm not in the hotel business now, nor was I in the hotel business then. I'm not really interested in being in the hotel business. But he said to me, I think this hotel really makes sense as a conversion to multifamily. And I had not heard of that before. But I figured, what the heck, I'll go look at it. So I went and looked at this hotel. It was an older hotel that it did have a franchise on it, a very low grade economy style franchise. And I thought to myself after we looked at it, what an absolute pain in the butt this must be to turn this into a multifamily. You've got to take the franchise off. You've got to speak with the city to get the zoning changed. You've got to empty out the hotel guests and then put in maybe 150 kitchens, if you got 150 rooms, remodel all these rooms and common areas, and then you've got to lease this thing up from zero. But I sat down to put some numbers on all of those problems, which is fundamentally what good entrepreneurs do, right? They don't say yes or no, that's scary, it's not scary. They just, let's sit down and put a price on every problem, which is what I tried to do. And what I figured out is, while everything I just named off for you, installing a bunch of kitchens, getting the franchise off, getting the zoning change, leasing up from zero, all those things are certainly obstacles. but they're obstacles that are frankly just worth solving. And I learned that in the conversion model, what you're doing is buying things at a hospitality cap rate, which might be in the mid to upper teens. And then once it's converted, it's physically converted via construction, but it's also financially converted. Once it becomes a multifamily, it appraises like a multifamily at a 6 to 8 cap instead of a cap rate in the mid to upper teens. So it's a financial conversion as well. And once I came to understand that, I'm like, wow, you can buy stuff for 25 to 35 grand a door in the same zip code where multifamily is 125 to 135 a door, and hotels are in great locations, and nobody else out there can afford to build anything that rents for $800 to $1,000 a month, right? True workforce housing, that supply is decreasing, that demand is expanding. And I said, this is a niche where I'm going all in. I'm gonna build a brand around being the best at understanding all the facets at acquiring and converting hotels into workforce housing. And so that's what I've been focused on the past 2 years. And it's been a journey in the sense that there weren't a lot of resources that I could turn to. It's not like somebody's written a book on doing this kind of thing. It's not like there's a course out there on doing this kind of thing. A lot of trial and error on what you say to the city, what kind of insurance do you get, what do you look for in the physical inspections, etc. And not that I don't have more to learn, but we've certainly finally have cracked the code, found the right partners, and have the right playbook on how to do this. And now we're off to the races converting hotels.
Very good. So the first deal you did, you live in Grand Rapids, right? So is the first deal you did, was that right in your backyard, or where was it?
I'd love to do a deal in Grand Rapids, extremely strong from a macroeconomic standpoint. And I got to say, I can talk about this objectively because I'm not from Michigan. I moved to Michigan like 6 years ago when I got offered a job at a university here in Michigan. But when I moved here from the DC area, and I told all my friends I was moving to Michigan, I quickly learned that Michigan is like a synonym with poverty, because they're like, oh my gosh, you're moving to Michigan. I'm sorry. And that's all. And I guess because everybody thinks that Detroit is bankrupt, Michigan is economically depressed, which is certainly not the case. And I've done lots of successful multifamily investing, particularly in West Michigan, where it is well governed and the economy is growing. And so it's not at all like Metro Detroit. And I would love to invest in West Michigan. We just have not found the right hotel yet at the right price point. Luckily, I've had great success with local government being friendly to the rezoning in West Michigan. We just haven't found the right property yet. The first project that we closed on and are under construction right now is actually in Houston, Texas. And that was a target market for me for a couple reasons. Probably, as you know, Anton, as being somebody that lives in Texas, just incredibly strong economically. And I don't see that changing. And I don't think you can go wrong by investing in any metro area where you have 6-7 million people. Like that we call it in economics agglomeration economies, meaning people want to be close together to buy and sell from each other. And this is why you have cities grow. And even once you have a couple million people in a city, like in my model of the world, it takes an absolute nuclear explosion economically to destroy that, which is why you even see a couple million people today still in the Detroit metro area, even though economically it's tough. So we went to Texas because you've got big cities that are unlikely to disappear. Of course, you've got wonderful business environment, but beyond that, you've got population growth and you've got job growth. And that's fundamentally what you need to grow housing. And that's not just my opinion. That's the opinion of pretty much every housing economist. Then you combine that with the fact that in Houston, it's the only major metro in the United States to not have zoning laws. So as long as we comply with the building code, if we find a hotel, there are significantly lower barriers to taking that hotel to multifamily. So that was attractive from the standpoint of doing our first deal, just to take that entitlement risk, that zoning risk, and set it aside. So Houston is one of our target markets because of the local government being so friendly. Would love to do a deal in Dallas, where you are. Major Colorado cities have also been friendly to me in terms of allowing the zoning to change. And then, of course, because of this new live local law in Florida, um, the long story short is result of that law is when you do a redevelopment and there's a certain percentage of your units that are considered affordable, which our units do hit that criteria, then local government cannot stand in the way of allowing the zoning to change on a property. So that makes major Florida cities a target for us as well.
You make some excellent points, right? And obviously, many people have talked about it, but you need to be in a place where there is population growth, employment growth, and the zoning has to be favorable, right? Everyone talks about affordable housing. All cities talk about affordable housing, but that doesn't mean that they are actually helping you to build or convert into affordable housing.
That's right.
So it's important to pick the right place where you have a reasonable chance that the city is actually in favor of doing that and actively helping, right? So Houston obviously is a very unique place when it comes to zoning law, and anyone who has ever traveled through Houston will see that very quickly. But certainly for a conversion as what you're talking about, that's a perfect situation.
Mhm.
Now, when it comes to the property itself, there are certainly some groups that have been doing hotel to multifamily conversions. Still feel it's a niche, and it probably will always be a niche, right?
Mhm.
Because there are only so many properties that are actually qualifying from a structural perspective
Mhm.
for that. It's kind of similar to office to multifamily conversion, right? Everyone talks about it, but at the end of the day, there are only so many office properties that are actually structurally suitable, right, from a floor plate perspective. And so I'm wondering, how did you approach this? Obviously, there are certainly plenty of these older hotels and motels all over the market. A lot of these owners struggle, particularly when they have a flag on it and they have the property improvement plan that is breathing down their neck, and they may say, so I just had enough, I think I'm going to sell.
Yeah.
So how did you pick that property based on the actual floor plan of the property?
Sure. So a couple things. Unlike with, you're right, you're totally right with office. Not all office buildings make sense just because, as you noted, the floor plates could be too flat, meaning there's too much interior space. It's not close to a window. And they don't always have plumbing that runs throughout the floor plate. You might just have a bathroom in the center of a given floor plate. So with hotels, we face some restrictions, as you noted, not quite as restrictive as I would think that looking at offices to convert are. I don't look at office buildings only because I want to stay in my lane, and it seems like there are plenty of hotels, but ultimately nursing home office buildings may be something that we expand into. But with hotels, we don't look at stuff that is under about 280 square feet. So your standard hotel room, 12 by 24, 288 square feet, that's fine for a studio unit. There are ways to lay out that room so that it does not feel crammed, feels totally fine. And but when you get down into the 240, 250 square foot units, those are tougher. So a hotel that's got maybe only 240 square foot rooms typically doesn't work for me. I typically don't want to combine rooms only because you're never doubling your income by taking two studios and making it a one bedroom. That usually doesn't make the numbers make sense. Beyond that, we're usually installing fire suppression systems. When you change the use of the building, you're bringing it up to modern day code, which will require fire suppression. So in order to bring in a fire suppression system, you've got to make sure that there's a hydrant nearby. So if there's a hydrant across the street from, like, let's say a 4-lane highway or something, it could be very expensive to bring more water to the building. That could be a deal killer. And then the other structural thing that hurts us is the number of parking spaces. So unlike a multifamily, hotels aren't designed to run at 100% occupancy. And what that means is it's pretty common to have a hotel that has fewer parking spaces than it does rooms. Actually, right now I'm negotiating on a hotel, 120 rooms, less than 100 parking spaces, or fewer than 100 parking spaces rather. And we've got to make sure that we've got enough land either available for sale or on the parcel to redesign the parking lot, do some extra paving to get some more spaces on there. Otherwise, like, if we can't get enough spots in, we'll have to eliminate the number of doors, which will in turn hurt our income and hurt our value. And then, of course, even if we can get more parking spaces on the lot, a lot of cities are looking for like a 1.15 to 1.25 spaces per unit. And sometimes they're unwilling to waive or be flexible on those requirements. And that can kill the deal as well. My argument a lot of times to these cities is, well, if we're doing studio units, people aren't going to have more than one car per unit. Please allow us to have the 1-to-1, one space per unit parking ratio if we're on a piece of a parcel that's very land constrained. And sometimes they're amenable to that, and sometimes they're not. But room size, parking, fire suppression, those are the three biggest constraints that we face when we're looking at a property.
Mm-hmm. So do you see that fire suppression issue is common? I thought that they implemented fire suppression in hotels and motels quite some time ago. So do you still see some of these properties that do not have it at all, or is it just outdated? Because
Great
that's a big
question.
difference.
So when I say fire suppression, I'm referring to sprinklers specifically. All of them will have your standard fire alarm system and smoke alarms in the rooms. But when it comes to sprinklers, essentially everything that we're looking at does not have a sprinkler system in it. And we're budgeting something like $1,500 a room on average, $1,500 to $1,700 to add the sprinkler system in. Now, it's that's one good part is, I guess I should say, more vertical hotels I tend not to like, just because you've got elevators, which are an added expense to maintain. They tend to be a little more difficult to rehab. Then you've got to heat, cool, and clean common areas. But in a colder climate, that could also be just what the market prefers, and some people like that. So there are trade-offs. But one good part about a hotel that's more vertical is if it's more vertical in most cities, even if it's older, if it's over 3 stories, it probably has the fire suppression, probably already has sprinklers in it. And so that if that's already set, then that's a real cost savings when you're doing the rehab.
So the properties that you have looked at, obviously, if you have to add fire suppression with the sprinkler system and all that, you actually dig into the walls, into the ceilings. These are all the properties pre-80s. So now you also have the risk of asbestos in some of them. So how do you, once you do more structural improvements, which is essentially is, right? Once you rip out some ceilings and some walls, how do you deal with that risk?
Yeah, so with all construction, there's risk, right? And I guess that's why we'll say generally, this, I think that it is less risky doing the conversion. That is, if you've got the zoning approval, which we get pre-closing, right? We won't take that risk on, but it's actually less risky with a lot of investments. And I'm just going to give a philosophical answer to your question, then I'll answer specifically about the risks and some hurdles of installing sprinklers. But with a lot of investments, you're typically getting a higher yield because you're accepting more risk. In the hotel conversion world, you're getting a higher yield, not because you're accepting more risk, but because you're buying at a low basis. And buying at a low basis is how you de-risk your investment. And actually, when you sit down to underwrite a deal, every number in your underwriting, from insurance costs to future taxes to rent growth to expenses, like, I understand you can get quotes for some of this stuff, but at some level, everything in there is a guess. Now, some of them are more educated guesses than others, and there's ways to be more or less conservative. But the one number that you know for sure is the purchase price, right? And that's the one number that as an investor, I can best control. And that's the number that I've got the advantage on here over everybody else. And what buying in at a low cost basis gives me is pricing power. We can drop our rents to a point where our neighboring properties cannot, right? Like when you're buying in at an 18 cap, I'm not as nearly as hurt by rising interest rates or cap rates than my neighboring properties are. So I guess I lead with all that to say that, of course, with construction, there's risk. That construction risk, though, fundamentally isn't different than a non-conversion property. But with the conversion property, we get the added benefit of buying in at this incredibly low basis because we're paying hospitality prices. And we can go in and do physical inspection and, of course, get bids on what fire suppression is going to cost before we go on with it. But to your point about fire suppression, let me paint this picture for you. So it's workforce housing, right? And that I'm not trying to renovate and be B+ or A- class. I don't want to compete with those guys. I want to be the most affordable product out there. What that means is it doesn't need to have a lot of frills. Not saying it's got to be junk and cheap or ugly, but doesn't have to be a lot of frills. And an exposed fire sprinkler line running across the ceiling is going to be acceptable in an $800 or $900 a month apartment with all bills included, including internet and cable, and maybe even furnishing. The fact that a pipe is exposed on the ceiling for the sprinklers is going to be acceptable to our target tenant. And so it's just running a single line, right, water supply line through all of the units. It's exposed. We have some drywall repair where it passes from one unit into the other, and then we'll paint the line so that it matches the ceiling. But we're not boxing it in with framing and drywall, etc., and trying to make it look perfect. That's not necessary. And but like I said, it's a couple $1,000s a room. The harder part with doing renovations is dealing with the vacancy while you're doing renovations. And there are only a couple other groups. I'm pretty sure I know everybody in the country, or know of everybody in the country, I should say, that's doing hotel and multifamily conversion. And most groups what they do is they empty out the building and then remodel all the units, right? They kind of want to redevelop it from zero. I do not do that just because I don't want to be cash flow negative on an operational standpoint. So what we'll do, and we're about to do this on a property that we'll soon be closing on, and we need to add fire suppression, is we'll do the fire suppression in stages. One half of the building will get it, and then the other half of the building will get it, so that we can continue operating as a hotel and as an extended stay hotel, prioritizing those weekly and monthly stays by having competitive weekly and monthly prices. Now, is that way more management intensive to run a hotel? Yes, And does that mean I've got to do the management myself? Because it's not like there's a hospitality manager that wants to come in and start running a hotel for a few months just to have their contract taken away so that we can run it as a multifamily. So does that make it more management intensive for me? Absolutely. But this is another situation where you just sit down and figure out what's the cost, what's the price, put a price on that problem. That is a code that's worth cracking. And so we will operate as an extended stay while we're doing that kind of construction to also reduce the downside of the vacancy.
So how are you approaching this? So if you buy a flag property, right, are you allowed to operate it during that transition period still under the old flag, or do you have to operate it under kind of uh, your own brand until you remove the hospitality aspect completely?
Yeah, great question. So I doubt the flag would allow that to happen, right? That they would allow a shutdown and some remodeling that wasn't approved by them. But if we're buying a property with a flag on it, we will require that flag to be removed. And all they call them liquidated damages, which is a fancy term for franchise termination fees, will require all of that to be paid before closing. We want no part of the flag. And so you're absolutely right. At that point, we are rebranding and we're running the hospitality business under a new brand. That, I understand, might sound scary to some people if you're used to traveling and you always stay at the Hilton or the Hyatt or the Marriott or something like that. But we're talking about hotels that are like 2 stars and lower. These are economy brand hotels. And the people that are blue collar workers or part of a construction group, or maybe people that need a temporary place to live that are staying at these places for a few weeks or a few months at a time, they are not as sensitive to the flag name as a business traveler like you or me might be, right? And so the absence of the flag there would not have as big of an impact on this hotel's business like it would a mid-scale or an upscale hotel's business. Our customers are primarily concerned about price. And if you've got a price that is competitive combined with clean, functional rooms, right, that's what checks the box more so than if there's a flag on there.
Okay, so you're required to remove the branding from the building, and then I guess you just put up a tarp, a temporary tarp or something while you're doing the.
We'll rebrand it and we'll just not have the word apartment on the signs for that period of time.
Oh,
So
okay.
yeah, so we might brand it as XYZ Studios or XYZ Living, right? Something of
Okay.
that nature. Yep,
Yep. Very good. So it's still your final brand, essentially.
that's right. Yeah, we don't want to rebrand twice.
Okay. Very good. Uh, and so when it comes to the unit size, you mentioned you want to ideally have 290 square foot or larger.
Yeah, 290.
Yeah. What about larger extended stay properties? Would that make sense? Like some of them, obviously, they have the not just the studios, but also the one bedrooms.
Yeah. So extended stay properties, probably most people are thinking that makes a lot of sense to convert something that's like a Hometown Studios, Marriott Residence Inn, Candlewood Studios, right? Some of those hotels, they even have 1 and 2 bedroom hotel rooms already in them. And they already have full kitchens. They usually already have fire suppression. Don't they make turnkey conversions? And the answer to that is absolutely yes. The problem is a lot of those things just make too much money as hotels, and they're performing so well as hotels. There's just not a big gain in converting them. They sell at really high prices per door, and sometimes almost multifamily prices. And we see cap rates of and a really high performing extended stay in a major metro, like an 8 cap or 9 cap, not that much different from a multifamily. So there's not a lot of arbitrage to take advantage there on the cap rate side. Doesn't mean it can't happen. I look at them, I make offers on them, but they're just a lot more expensive to where it's typically not not worth it. Now we're buying. I'm actually working on buying two right now where it just happens to work, but it's less typical. Now I would say that like I named off Candlewood, Hometown Suite, Marriott Residence, and those are higher end extended stays, and so those almost never work. And the liquidated damages on like a Marriott or a Hilton to get the flag off the building could be over $500,000, right? That you need the seller or that somebody needs to absorb.
Somebody,
So
sure.
it's that just makes the deal more difficult as well. So it's got to be it's got to be a nicer hotel extended stay that's in a nice area and that's underperforming, which is just less. It's just less likely. It's just not as common of a find as more of like just the mom and pop motel that maybe started off life as a Holiday Inn, then it became a Best Western, then it became a Super 8. Now then it was an Oyo, and now it's nothing. And right, nobody has enough cash to really clean the building up, and there's a lot of other new hotels around it, and its economic life as a hotel has ended. That's where we can come in and buy it for 20 grand a door or lower, spend 10 grand a door on it, right, and really pick up. We can effectively buy it at like an 18 cap, right, and really take it down to like a 7 or 8 cap and make a lot more money than we could on the extended stays. But some extended stays work. It's just less typical.
Right. Okay. Good. So when the first movement hotel to multifamily conversion movement started, I would say we have seen a lot of properties that were trading at that 15 to 20,000 per key, right?
Mm-hmm.
But then more and more people attempted to move in and pushed up the prices. Now you talk about 15 to 20,000 or somewhere around that. Obviously, in a larger city, it's likely more. But you see that you're still able to find properties in at these price points.
Yeah. So great question. It is certainly the case that hotel owners and hotel brokers are becoming more attuned that there's money to be made on the conversion, and they kind of want some of my profits to be in their pocket on the buy side. And so if it's not a distressed property, I need to be the high bidder, but I'm well aware of what these things are worth as hotels, so that we are not we maybe are the top bidder, but we're not overpaying for these things either. To your question, 15 to 20,000 a door, that is certainly more of something that is not in a major metro in today's market, and that is, or if it is, it's very distressed, or it's got a like 300 unit count or something that's really high, and that makes it a little bit less appealing as a conversion because you don't want to have too many studio units in a given market. But 25 to 30,000 a door, there's lots of inventory out there for that. That makes a good deal, and there is and there's absolutely stuff that's upper 30s to 40,000 a door that is not distressed, good quality hotel, that some of it even has kitchenettes in it that can be absolutely profitably converted. So yeah, maybe not 15 to 20, maybe more 25 to 30, but still meat on the bone.
Mm-hmm. Very good. And you mentioned typically you will spend around 10,000 per unit.
I would say it all depends, right? And it all depends on how much exterior work the property needs, and it just, there are, as you understand with construction, there are a lot of variables, but I would say that maybe on the high side, you could drop in 15,000 a door if we're talking about refinishing bathrooms, flooring, walls, adding some circuits, and doing a small kitchenette. Probably get that done in most markets for 15,000. If the room itself was good and we were only talking about adding a kitchenette, the bathroom was good and the rest was good, then maybe you get that down as from somewhere in the 5 to 7 range.
Yeah. Okay. Now you talk about kitchenettes. So you have a kitchen sink and you have a built-in stovetop.
Absolutely. Okay. So yeah, depending on the property we're looking at, we'll either do a 2-burner stovetop on the kitchenette, or the full-size 30-inch range, right, cooktop and oven, somewhere between a 16 and 18 cubic foot refrigerator, so full-size refrigerator. We'll put in there a sink that's more than just a wet bar, right, like a 27-inch sink or so. And typically, I've not done any property with dishwashers just because that's not what the market demands.
Sure.
We'll still have the PTAC units, which are the under the window wall unit that is common to most hotel rooms, and no changes really needed in the bathroom. But it's not a kitchenette that feels like a hotel, right? If it was a mini kitchenette with just the two burners and the microwave, etc., like then it wouldn't look or feel any different than a studio apartment.
Right. Yeah. So that's good to hear, and it's actually very important also for anyone who is planning to do this.
Mm-hmm.
Obviously, banks are more flexible when it comes to financing, but for the agencies like Fannie or Freddie, if you do not have that built-in stove and sink, it
Mm-hmm.
doesn't count as a kitchen.
That's
So
exactly right. Yeah, I've had the local Freddie reps tell me exactly that you've got to have the attached cooktop in there, right? You cannot just have the hot plate, right? You have got to have the sink. You've got to have the attached cooktop to call these things kitchens for financing purposes.
that's right. Yeah. Yeah. Yeah, very good. So you've you shared a lot of valuable information here with our listeners, and maybe one more point when it comes to the rents. Obviously, it varies dramatically
Mm-hmm.
from market to market, but you touched specifically on the property in Houston. So what is the so
Oh, there we are.
what is the oh, okay, so it looks like we lost each other for a minute. So when it comes to the rents on these units, what is your expectation where the rents are going to come in?
Yeah. So that's something that's also difficult to predict because it's not like you always have direct comps on another hotel conversion property. And what we try to do is and the other thing is you can't always look at studio comps because most studios are in A and A minus class new construction buildings. It's not like there's a lot of 60s, 70s build C class stuff that's got studios in it, or at least a lot of studios. So what we try and do is find the cheapest one bedroom nearby, the absolute cheapest, most basic, unrenovated near one bedroom nearby, and try to be a good 20% or more underneath that. And now, of course, when you go to apartment complexes, there's usually some mandatory fees, pet fee, parking fee, pest fee, all this different junk. And we like the model of having one price, and we believe our tenants are at an income level where they like the one price model for all utilities. This is electric, gas, water, internet, and cable all in. And so we're looking, depending on our unit size, anywhere from 850 to 925 all in per month. And that probably sounds very competitive, but that's what you can do when at that property I'm talking about, we paid $28,000 a door. And those are also units where that property was built as a 250 unit property, and the units were combined at one point. It's got about 120 units right now. So our typical unit is 570 square feet, and it's a true one bedroom, two hotel rooms together. One will be the living room, kitchen, one's the bathroom, bedroom. So those will compete with true one bedrooms in the area, all in for $925, and we expect at that price point for it to be a big hit.
Oh, definitely. So with that client base that you are attracting, do you have to do a lot of it on a month-by-month basis, or do you stick to 6 or 12-month leases?
We stick to 6 to 12 months, and a couple comments on that. Of course, we'll do month to month if folks want to pay a premium, and of course we'll let them pay weekly or biweekly as well. But you may not know this, folks may not know this unless they're spending a ton of time hanging around crappy hotels like I am. But the folks that are in these very crappy hotels, they already live there. So that property that I was talking to you about, the day we bought it, had 60 rooms occupied, and 58 of the 60 rooms were folks that had been there for 4 months or longer. Some people have been in there for years, and these are people that are just an eyelash above poverty. They've got an eviction on their record. Maybe they have a criminal problem. They're functioning alcoholics, or they're just not good with their money. Whatever their situation is, they can walk into an extended stay hotel, pay their $250 a week. They have to pay up front. They pay a $50 deposit one time, no questions asked, and they're in. And then they've got a clean place with the utilities. They don't have to worry about anything. It keeps their life simple. And so that $250 to $275 a week, some people are paying $1,100, $1,200 a month, but they're making weekly payments on it. And we're able to take their housing payment and cut it by 20 to 30% just by putting them on month-to-month leases, and we'll give them a brand new unit in the process. Now, not everybody will qualify for that, but we've already got a big pool of tenants to pull from, the people that are already living there. And if they have a strong payment history with us, there haven't been any complaints or behavioral issues, then they're gonna that'll count toward our qualifications.
Mm-hmm. Do you require income requirements, right? In typical multifamily, right? So it's 3 times. Some landlords may go down to 2 or 2.5, but in most instances, everyone is hoping to keep it at the 3 times.
That's right.
Do you apply the same principles?
So each property is going to be a little different, and right, like we are looking at a combination of credit score, criminal background check, and income. But certainly 2.5 to 3 times is our baseline.
Okay, very good. So one more thing on the operational side, which I think for a lot of people who consider this, it's only kind of that fear and almost the elephant in the room when it comes to operation of such type of asset, which is crime, and how do you avoid it? Whether it's you mentioned you have very often individuals that have had a hard time in their life, and unfortunately that also includes some criminal elements. So how do you deal with that situation to keep the property safe for those that want to have a safe living environment?
Absolutely. So these kind of mismanaged hotels where the owner is really just lowering prices to attract occupancy, they do tend to attract a criminal crowd. And so you've got to be aware of that. And you try to get aware of that by really spending some time there watching what's happening during due diligence. And a lot of times you can just talk with the hotel manager about what's going on. And they're in a position where the previous owner sometimes just didn't want to do anything about it. And so we just say, if there's a lot of traffic going to this room, figure out what's going on in there and then get rid of them. Unlike with an apartment complex, we don't have to renew people, right, daily or after the week. And if someone's a hotel guest, there's not an eviction period, right? So if we're unhappy with someone, we can say, hit the road and lock their door, and we can inspect the room to see what's going on in there. And so whenever we take over a property, that's exactly what we're doing. People that are suspected of criminal activity are asked to leave. We do that in consultation with the manager. And then, of course, we are always turning around, and if we're not having security at the beginning, we'll have a 24-hour front desk because that's often cheaper than security. And then, of course, we're installing a new, more extensive security camera system to get in control of it. And getting control of that kind of thing is frankly just good for business, because then more people want to stay there. And knock on wood, we've we've tried to be vigilant and do our best to get ahead of these things, and we've not had any issues with crime yet.
Yeah, that's great to hear. So do you do your own property management, or do you hire third parties?
So when we get fully stabilized as multifamily, we'll turn it over to a third party. But when we're doing the construction and running half of the property as a hotel, we're running it as this hybrid model, you might say. And while we're doing the transition, there's not really a management company out there that can kind of straddle both the hospitality and multifamily world. And so we directly manage for that point in time.
Okay, very good. So have you found property management companies that are actually used to that, operate that in that niche, right? Obviously, we all know finding the right property management company is a challenge.
That's right. That's right. And that's another reason why you just want to go to a major metro. But I sit down and talk to them, and more, they are becoming increasingly familiar with this idea. They've read and seen about it, and they understand that management-wise, it is really no different than another C-class workforce housing property. And that when you're doing the leasing for the first time, that's really no different than leasing up a new development, right? It's just like if the construction and everything is done, they just sit down and do their multifamily job, kind of no different than they would at any other property.
Yeah, very good. Alex, you provided our listeners really with tons of valuable information. I think anyone who is considering this should certainly talk to you, and if they are if they are not willing to take the work, then talk to you whether any of your investment opportunities make sense to them, right?
Yeah,
So, how can our listeners reach out to you?
they can find us at HotelSHIFT, SHIFT, HotelSHIFT.capital. You can also connect with me on LinkedIn. And as folks are looking for, if you're interested in learning to do this on your own, like I'm glad to lend you my experience on it. If you've got a hotel that you think might be a good candidate, go ahead and send it over, and I'll give you some feedback. Glad to be a resource to anyone that's looking to get involved in this kind of thing.
Yep, great to hear. Thanks again, Alex, for joining us today. It was really
It's been a
great.
pleasure. Bye-bye.